Hello, welcome to this week's Forex Outlook here at xm.com. I'm Rafi Bardian, currency analyst, and here with me is our chief economist, Michalis Sorengiadis. So Michalis, we did see some big moves in the UK pound this week. We saw the dollar not doing too badly. The euro had a bit of a mixed week, though it does set to look to end the week on a high note. So can you give us a brief overview of what happened?
Basically, it seems a little odd, but the big story for the week was the strength in the UK pound. This was because of reports that there has been progress in the Brexit negotiations and that the two sides are looking close, at least on the financial deal, possibly also on the Irish border issue. So we'll see how that is going to play out. There really wasn't too much worry about the rights of EU citizens in the UK. That was more or less not the main sticking point, but definitely the financial issue and the Irish border, very important points. And we are seeing some hopes that maybe there's also going to be a meeting between May and Juncker next week, and there would be some kind of draft deal ahead of an EU summit around mid-month. But why is this important? This would allow the Brexit negotiations to progress to the more important trade issue, the trade relationship that the EU is going to have with the UK once it's out of the EU. So that will definitely mark important progress and definitely reduce the chances of a disorderly Brexit, which is what businesses and investors might be worried about. In other developments, we also had the dollar following the ups and downs of the tax reform package in the US Senate right now. So we haven't really seen something conclusive yet. There are some hopes, but those hopes were dashed yesterday. We'll see what's going to happen in the next 2 days. And also the euro on balance ending a little stronger. I think there's still optimism about the economy there and about a new coalition government in Germany, the same as the last coalition government between the two largest parties, so-called Grand Coalition. So maybe we'll see that playing out. Why don't you tell us something, Rafi, about next week? We haven't heard much about many news coming out of Australia recently. I think the Aussie is definitely going to be an important topic next week, and the Australian economy. So what should we expect?
That's right. We're going to have the Australian third quarter GDP figures out next week, as well as some other data on trade and retail sales. Plus, the Reserve Bank of Australia will hold its monthly monetary policy meeting on Tuesday. The Aussie has been struggling lately. We've seen it drop to 4 months lows. It recovered a little bit. Now it's back heading towards those lows. We're seeing this week we saw the yield differential between 2-year US and Australian government bond yields turn negative for the first time in many years. So that's also been weighing on the Aussie. The main factor, though, is of course we've been seeing the expectations of rate hike by the RBA shift further out into the future, given the fact that although growth has been relatively healthy, inflation remains very much subdued, and even though unemployment has been falling, wage growth has been low, like in many other advanced economies. So it's going to be interesting to see whether there's going to be any surprises in next week's data that may help shift that outlook in terms of the Australian economy and inflation there.
Definitely something to watch, absolutely, given the currency's weakness. Are we getting some more data out of the US? I think it's going to be a more important week. Given that the central bankers this week, I think present and future, did not move the US dollar much. What is happening next week?
That's right. We heard from Powell, we heard from Yellen. They pretty much said the same thing that we've been hearing, that interest rates in the US are expected to go up gradually over the coming period. And the next week's non-farm payrolls report for November isn't likely to change that because rate hike in December has already been pretty much priced in. So although we're likely to see US jobs The non-farm payrolls coming in at around 185,000, close to recent levels. It's not likely to see much of a reaction or as you would normally expect this time round, unless of course there's a big surprise in average earnings. They're expected to increase by 0.2% month on month. We're also going to see other data, including the ISM non-manufacturing PMI and factory orders. But given that we have this continuity in the Fed when the new chair takes over in February, plus December rate hike already priced in, the data might come second to what's going to happen on the tax front in the US.
So not a lot of volatility out of the US, although we did see that spike in yields that we saw some increase. Finally, the loonie was down, the Canadian dollar was down this week, was a loser, and I understand we have Bank of Canada next week, so what should we expect for the loonie?
That's right. We saw the loonie hitting 1 month low against the US dollar. Bank of Canada next week is expected to hold rates. We saw two consecutive rate increases in July and September. There was some expectation that they might raise again in December, but now markets aren't forecasting another rate hike until spring next year. Bank of Canada might potentially signal a rate increase in its statement, but if that's the case, then we could see some moves in the loonie. But for now, Bank of Canada is expected to stand pat, given the fact that recent data has been a bit on the mixed side.
One of the few currencies that the US dollar has done well against this week, the Canadian dollar. Thank you very much, Rafi. Thank you everyone for watching and have a great day.